It's Sunday, the 22nd of February 2015. I've got a chart here for Alkane Resources. I put this one up 2 weeks ago today, I think, when it was trading at about 28-30 cents. So I had a theory of sort of a inverse head and shoulders pattern that had played out and we'd broken above the neckline. And obviously we've had a very powerful trend forming, and this target I'd sort of suggested was potentially this 36-37 cent range. Actually overshot above that and got to 40 before it started to see some, I think this day here in particular, there was a huge amount of trading at 40 cents relative to how the normal volume, sort of 2 or 3 times normal volume, all traded at 40 cents, which is a sign of sort of the, I guess, some distribution from some larger shareholders. The first sign of real resistance. What I wanted to talk about was sort of long-term potential. Obviously, this got beaten up for a long way. It's come back down, and this 46 to 50 cent range is what I've drawn as the sort of the long-term resistance line that I think we need to get above. The theory I've got sort of this is in Thomas Bukowski's book about chart patterns. He sort of looks at what he calls an Adam and Eve double bottom, and which means the Adam is a spiky sort of double bottom like this, and the Eve, the protracted, curved, longer bottom. So I think that's sort of what we've seen here at this 25 cent. We've had this short spike and then this long protracted bottom. So 45 to 50 cents is this sort of the range that we need to get above before we start seeing a start of a larger trend, I think. It just so happens that if you look on the weekly long-term chart, this is a stock that's been around for more than 20 years, I think. It happens to be the historical resistance level as well, and that often happens with stocks that have a long background, that these ranges still hold true. So if we can get above that, which is possible with the news flow that is starting to come out, I think then you're sort of looking at potentially some sort of move maybe to 70 or 80 cents, which would be, I guess it's this, if I can get it working, this range here repeating out toward 70, 80 cents is sort of the long-term double bottom pattern if that plays out. But that's for later this year. But just at the moment, it's a really good trend forming. If it can hold, I'd like to hold for a few days here around this 36 cents. We've seen large volume on the way up, small volume these last 2 declining days. So that's exactly what you want to see. Want to see it maybe above 30 to 33 cents. Sort of I reckon about 33 cents. I think is a good level. If we can hold that, it's looking very bullish for the next few months.